Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. Today, I'm going to answer one of your biggest questions, and that is, what is swing trading? How does it work? And this is one that y'all asked me a lot on public. I think it was like Tuesday or so, and it came up like 3 or 4 different times. So I want to take the time, sit down, answer that question. We're actually going to use the whiteboard too. So for old school people who have been subscribing and been on this for a while, y'all been wanting the whiteboard, so the whiteboard is coming back for this video. If you want more whiteboard stuff, let me know. You know my handwriting is sloppy, but in this video, it's alright. Alright, so let's go ahead and talk about what swing trading is, how it can help, benefits, disadvantages, all that kind of stuff. So swing trade is basically you taking advantage of what we would like to say is known trends in the market, or swings. So for example, I'm just making this up out the blue. For example, let's say Target. Let's say that every year around September and October, Target tends to do well, and it's because of back to school season, it's because of holiday shopping and fall, and people just love shopping there. If I look at the chart and I see every September it goes up, every October it goes up, and then falls in December. Again, I'm just making up an example. So what I would do is I see a swing, I look at a chart and say, okay, I keep seeing it do this exact same thing. Let me buy in August, wait for it to go up September, October, and then sell by December 1, and that would be my swing. But what I'm really doing is studying a chart, looking for these types of trends, and then buying and selling based on what the chart is dictating and based on what the chart is telling me to do. That is really all a swing trade is. I see swing trading in between day trading, which is more difficult, more intense, and long-term investing, which is less intense, more reliable, and a lot more relaxed. Swing trading to me is right in the middle where you're getting both of those, because usually in a swing trade you're holding it anywhere between a week to 8, 9, sometimes 10 weeks depending on what the stock is doing, and that's it. You look at it, you say, hey, this is what's going on. I'm buying here. I think the company's going to move this way, or the stock's going to move this way. I'm selling out of it. That's all it is. Now, we have talked about some of these swing trades that I've done in the past. We talked about PayPal. That one didn't go so well based on what happened in September. And that's a disadvantage of swing trading because, one, you are relying on previous data. Anytime you look at a chart, it's telling you what happened in the past, and you are making predictions based on how the chart looks in the past. I'm going to show you 2 very good examples of that. Sometimes you're going to be right, sometimes you're going to be wrong. You have to set stop losses and kind of protect yourself if it goes down too far, which is if you go back and watch my videos, my original videos on PayPal, not the ones we did in the last few weeks, way before the Pinterest thing, I said, look, I'm getting in at 275. If it gets down to 270 or whatever the price was, I'm getting out of it. Talked about the same thing with PAVE, where I'm looking at those charts and saying, look, this is what it looks like is going to happen. I know infrastructure is coming, or at least it was at that point in time, and this is what we expect to happen. The disadvantages again are it does not factor. The chart is not going to tell you this is what's happening in Congress. You're not really going to know that. It's not going to factor in what may be happening where the company is going to acquire a company or not. That's what one of the things that's happening to PayPal right now. We don't control that. The chart is not going to tell you that. Snapchat is another good example where they announced that the Facebook changes affected their business. They dropped 27% in a single day. The chart's not going to tell you that. Now you can research that, and I've said this before, like that's probably something you should have known. But again, if you're a swing trader, you're probably not going to know that. What you're looking at is look at the chart, I know when to buy, I know when to sell, and I'm really not paying attention to what the company is, what they do, and frankly, in some cases, it really doesn't matter because you're not holding it enough to care. Honestly, if I'm not going to hold it for that long, do I really want to do, 5-level deep parts of, research 5 levels deep into a company I'm only going to hold for 4 weeks? Probably not. But again, there are benefits and disadvantages of that. You have to decide how much research you want to do and then how your chart is set up. The other advantage, disadvantage really depends on how you look at it is what are the factors that you're setting up your chart to have. Everybody, and I mean everybody, has their own settings on what they're trying to do and what they're not trying to do. That I have my settings, I talk about it in my course, and we do what we do and we make money with how we make money, right? I've taken other courses, I've sat in classrooms. Everybody has their own thing, and that's totally fine, but you need to have something if you are going to decide to do that. Again, my course is out there, my books are out there. There are other YouTube videos and stuff that tell you their techniques and process. That's totally up to you. But that's basically what swing trading is. We're taking advantage of swings in the market one way or another, and we're trying to capitalize on it for a short period of time, sometimes a week, sometimes 4 weeks, sometimes 10 weeks, whatever works for you. So now we're going to transition. I'll show you the actual video of me really explaining what it looks like to enter a swing trade, how it tells you when to buy and when to sell. All right, so I'll talk to you guys later. All right, y'all, so I wanted to kind of bring it old school and come back to the whiteboard, which a lot of people like. Let me know if y'all like it in the comments. And wanted to go over what swing trading is and how it works. So in this perspective, we already talked about the basics of it, but we want to get into what it would actually look like. So this is PayPal, as you see here. And this is one of the stocks I have been talking about, and you can kind of see what's going on here. So before we go into further detail, these are called, these little things here, for those who may not know, these are called candles. And for each one of these candles represents 1 week. So during this week, the stock was up. That's what the white candle means. And then during this week, that candle was down. Now, I can do a separate video on how to read candle charts, but that's just basically what you can see. You can see this is a bunch of good days, and these last 2 weeks just haven't been great. That's basically what you need to know. Now, what we do in swing trading is you're trying to capitalize on these swings. As you can see here, this is a swing up, right? So I could have bought it at 174, which is around what the price was at that point in time, and then probably sell it somewhere around where this black line is. So this black line is called a channel, one of my favorite trading techniques I talk about in my free class. And basically what this is saying is that this stock keeps bouncing between these prices, or at least it was up until where it is right now, right? So what we're trying to do is capitalize on those swings. And you can do this with buying and selling stock. That's the easiest way to do it. Or you can do it with options. That's a more advanced strategy, and we can get to that later. But basically, you've got one swing here. It says 1. Then you got a swing down. It's 2. Then you got a little bit of swing here. I'm not going to really count that one, but you could if you wanted to. It's no big deal if you don't. Then you've got swing 3. And then you kind of have this weird swing. This is really a swing down, especially right here. So this is 4 different swings over several months. So there's 4 opportunities for you to profit off of this stock. So you could have, let's say, let me erase this. I don't want to make too many complications here. You could have bought at this point and then sold somewhere in this space and say sell, and then you probably just would have waited. You might want to have bought it again. Could have bought it at this point, waited several weeks, and then sold, and then really just let it kind of tank and do whatever it's going to do, and wait for it to kind of come back up somewhere in this range is what you would try and do. And that's really how swing trading works. What you're doing, and there's some advantages and disadvantages we'll talk about, or reiterate rather. So this is all I need to do. I need to have a good chart. Now the question is, what settings are you using? What apps are you using? What are your trading techniques and all that kind of stuff? Again, I teach all this in my course, and I'll actually write it here. That's at Building Bread, and it'll be in the link and stuff as well, .com/tools, because 15 or 20 minute video is not going to tell you everything you need to know in life about swing trading, but this is the super basics of what you need to know. So all I need to do is I need to have a good chart. I need to figure out my entry and exit points. So like we were talking about here, maybe that's an entry point. This is definitely an entry point, and then these exit points, which we have, we've already identified some pretty good exit points, and you're good to go. Swing trading, as mentioned earlier, is going to be, sometimes several weeks. So in this case, for this one, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 weeks. So close to 2 months to make that profit, which would have been pretty good depending on how many sales or how many shares you got. So we're talking about $260 a share here, and then selling it at like 300 or 310. So $40, $50 a profit for every share that you have for 2 months. So it really depends on how much you want to invest and all that jazz. But this is how it works. Now the disadvantage of it is I'm just looking at this chart. I'm not looking at anything else. I don't know, assume we don't know anything about it. I don't know what the company is doing. I don't know if they're good. I don't know if they're bad. I don't know what the economy is doing. I bought it for the sake of buying it because this chart looks good or looked good up until this happened. Now I actually own PayPal and I bought it right around here. And here's the thing. It looked like, based on the previous patterns, right? If I were to take this away, let me erase all of this. There's the good and the bad about it. This is up and down and up and down and up and down. And it looks like right here, if you bought it right here, it looks like it's going to hit that line and come right back up. That is not what happened. It looks like that's going to happen. I thought that was going to happen. I bought it right around 275, I believe, and it didn't do that. The good thing is we had a stop loss, so we didn't lose too much, but that's a disadvantage. What happened in real life at this point in time, right around here and beyond, is September, which is a bad month for the stock market. The stock market was not great in September, and then as we've talked about on the channel before, I know at this point you guys are watching, they were supposed to buy Pinterest and they backed out of Pinterest, and we'll see where that goes. And these are things that when you're swing trading, you don't know. The chart doesn't tell me that, and there's nothing that you can decide or determine based on what happens there. So this is an example of what used to be a good swing trade and now it's not anymore, at least not right now. So let's go to an example of one that is. So we're going to go down here to Goldman Sachs. People always ask me, why do you like Goldman Sachs? Why do you like the banks? So on and so forth. There's a lot of reasons, but this is another good reason as to why. So right here, we have another decent swing here and just kind of really smoothing that out, right? And it looks like right now, this is pretty much where it is. So this would have been an entry point. I could have bought here. Maybe here, maybe. This is definitely would have been a buy place or entry point and another entry point. That's 3 chances for me to buy if I'm just buying the shares. And then could have sold here, could have sold here, could sell here. And in theory, right now, maybe this is an opportunity for me to buy it right now, which is something I'm actually considering. But again, it looks like it's supposed to come out at 440. That doesn't mean it will, right? There is no guarantee that if I buy it, and you can see here on the edge, it's about $410 a share right now, I might be able to hit that and make $30 a share for however many shares I get. Maybe, right? It's always a maybe, but this looks like a very easy swing trade, and this is an opportunity for you to do that. The other way, and again, I'm not going to get into too much advanced stuff because I go into a lot of this in my course, is you could also do an option trade, which means that I could buy the shares here and then actually buy a put option. I wrote an article on put options, and then actually make money as it drops, and then buy it again as it goes up, make money when it drops again, and just really keep repeating this process and really make, let's see, 1, 2, 3, 4, 5, 6, 7, and maybe even 8. I can make money 8 different times on the exact same stock based on which direction it goes. And that's, again, really, really advanced, but people do it all the time. I've been able to do it from time to time, depending on the company. The problem is, again, which, I like swing trading. I think it's really a middle ground between day trading, which I think is a lot more reliable because, again, I'm taking 1, 2, 3, 4, 5, 6 weeks. That's not bad for a pretty decent profit. So that's basically it as to what it looks like on a chart. Again, buildingbread.com/tools. I'll actually add a discount code for people who are looking to do this since y'all are asking so much about swing trading. But that's how it is. That's basically how it works. Is you are trying to find a good stock that has a decent pattern. This one, if you ask me, I don't think PayPal is a good trade right now. Is PayPal a good company just to buy and hold for the next year or two? Maybe. I'm leaning towards yes, but this right here is not encouraging me to do that. So I wouldn't buy PayPal right now. Personally, I would not buy PayPal right now. That's just me. But would I buy Goldman Sachs? Well, yeah. I mean, look at what's going on here. and what we would expect. That's not a guarantee though, because this could just fall off the map for all we know, because this is what happened to PayPal at the time that we were looking at it. By the time I was looking at it, rather, if you were to zoom in, it was just like this. And so you would look and say, oh, it's going to come right back up, and it didn't, right? So there's always positives and negatives, but I wanted to show y'all what it looks like in a good sense, but also in a sense that doesn't work, so we can be transparent about it. Again, I like swing trading. I do it from time to time. I always like to have my long-term stuff. Y'all see that on public. Obviously index funds, and then I've got my swing trades. I'm usually very, very open about this. I told y'all about PayPal. I'm still in one for Pave, and that's kind of on the brink of paying off. We'll see. And you kind of take it from there. So that is swing trading. That's what it really looks like, and that'll be it for this section of the video. Okay, so hopefully the video and the whiteboard session was very helpful. I think it tends to help, especially when you're talking about like trading and charts and all kind of stuff, to really draw and show you what those things look like. Again, I've talked about the advantages and disadvantages of swing trading. Where I stand, I'm a fan of swing trading. I like it because I enjoy a little bit of the activity, like getting in and really being a little bit more active. It tends to be, at least in my case, for me and my students, it tends to be pretty profitable. The good thing that we set up a few extra measures to really be a little more surgical on what point we get in and get out. And if a trade does not go our way, like PayPal, we know exactly when to get out and not to lose too much. So I think, for example, I may have lost like $50 on the PayPal trade, because we knew, like, look, if it drops under this price, we're getting out, we're taking our money, and we'll wait for the next opportunity, which is what we're doing now. So you always want to be able to protect yourself. That's if you don't have that, you don't have a system for protecting yourself, you don't have that stop loss limit, you don't know what to gauge as to when to get in and when to get out, that's where some people fail. The other thing is you don't always get the long-term effects of a company. So for example, if you saw the PayPal trade, you saw like you can get in and get out and get in and get out. You could have just bought everything at that one point in time at the very beginning on the left hand side of the chart, just left it alone, and still been incredibly profitable. That's exactly what my son did, right? We bought PayPal for him last December, and he's fine. The stock is down right now, but he's fine because he got it way back when it was low. So that's the other thing. It's always about that balance between long term, between swing trading, and what it is you want to do. I think that swing trading makes sense if you're trying to use the money now and you're trying to see faster gains. It doesn't mean that you're going to see the biggest gains. That is a big difference. So if I'm looking, let's say I'm trying to generate some income, I need an extra, I'm making numbers up here, $50 a week, I need an extra $500 a month, then maybe swing trading is an option for you. Again, it ain't gonna be guaranteed. Okay, so that's the other thing. Whereas long-term investing is also not guaranteed, but it's a little smoother. I don't need to be so surgical about when I need to get in and when I need to get out. I just need to buy, hold, do my research, and be fine. Which, if I did that for PayPal, or like my son, he did that for PayPal, he's fine. I tried to swing trade and really make it a bit harder on myself, and I just happened to buy at the wrong time. Oh well, right? We got plenty of other trades that are working out totally fine. That one just was one of the ones that didn't. If I were to buy it or have bought PayPal and just held it and wait until next year, we'll see, right? Replay the video in a year and see whether or not that would have been a good move. But that is the differences between long-term investing and swing trading and how you can use it to your benefit. All right, let me know what you think in the comments below. I do really want to know your thoughts. Like the whiteboard, don't like the whiteboard, like the explanation, don't like the explanation. What other questions do you have? I always love answering questions. We're also going to do a grade my portfolio episode probably on Friday, which is my birthday. Probably pre-record that one because I like to dig in and really see what these companies are about. If you want me to grade yours, put your public link in the comments so I can go through and do that. I enjoy doing it, but y'all, I don't know, maybe y'all got scared. I don't know. But feel free to submit your portfolio and we'll have an episode up for this week. All right, that's it for me. Talk to you guys later. Bye.